Natural capital refers to the renewable and non-renewable environmental resources and processes that support an organization's operations. Air, water, land, biodiversity, and ecosystems. It underpins all other forms of capital by providing raw materials, energy, and ecosystem services. Measurement challenges arise because many environmental resources lack market prices and are not fully captured in financial accounts. Although IAS 37 and IFRS 13 provide limited guidance for environmental liabilities and fair value measurement, they do not account for externalities such as carbon emissions or biodiversity loss. Consequently, integrated reporting relies on environmental performance indicators like carbon footprint, energy efficiency, waste intensity, or water usage. Quantifying these impacts often involves specialized sustainability metrics or life cycle analyses, which require scientific data, modeling, and estimation. These complexities make comparability and assurance difficult, especially when global standards or local regulations differ. Disclosure issues for natural capital focus on transparency regarding environmental dependency, risk, and stewardship. The International IR framework encourages organizations to explain how their business model interacts with the natural environment, both in terms of impact, resource use, pollution, and dependency, supply chain resilience, access to water or energy. Integrated reports should highlight strategies for mitigation, adaptation, and sustainable resource use, linking them to financial performance and risk management. Increasingly, disclosures align with frameworks such as the Task Force on Climate-Related Financial Disclosures, TCFD, or ISSB IFRS S2, ensuring consistency in climate risk communication. However, meaningful disclosure requires moving beyond compliance to demonstrate accountability for ecological outcomes. For finance professionals, this involves quantifying environmental costs, integrating them into investment appraisal, and explaining trade-offs between profitability and sustainability. Natural capital disclosure thus transforms environmental responsibility into a measurable component of long-term value creation, signaling resilience, transparency, and ethical stewardship.